liquidation proceedings and recent judicial developments. So when it comes to liquidation proceedings, we all know that IBC is an evolving law. It's been 8 years since IBC has been introduced, and there are several practical difficulties that has been faced by the insolvency professionals while conducting their jobs, conducting their duty in terms of the insolvency and bankruptcy code. And based on the practical difficulties faced by the insolvency professionals, necessary amendments have been introduced in the liquidation proceedings from time to time. There are still some gaps wherein the provision is not clear. In that case, the insolvency professional has to seek advice from the NCLT, from the National Company Law Tribunal, to have the clarity on law, and that law, that particular clarity provided by the NCLT bench, become a precedent for the simultaneous or respective matters to be followed in future. Now, coming to the practical difficulties, when it comes to discussing the practical difficulties, it's more important to discuss what is there in the law, so that it will be easier for us to understand the practical difficulties. So we'll just start with giving a brief about what is the process to be followed once the company is into liquidation. And then we'll slowly move towards the practical difficulties that has been faced and what are the solution to that, if at all there is any solution provided by the judiciary. So what are those solutions pertaining to those practical difficulties? So I'll start with giving a brief, and that will be continued by my colleague Neha Malu. So when it comes to liquidation proceeding, IBC is broadly divided into two parts. One is CIRP and the other one is liquidation. As we all insolvency professionals are aware of this, that CIRP is about the resolution. It's a chance given to an entity for revival. And liquidation is when this option of revival is not there. In that case, the company slips into the liquidation. So there are circumstances under which the company slips into the liquidation process. What are those circumstances? The circumstances is first, when the COC decides that not to continue with the entire CIRP process or the entire period of the CIRP, given the viability of the corporate debtor. It has been decided by the corporate debtor, decided by the COC to liquidate the company rather than following the detailed process of CIRP. So if COC decides to move for the liquidation process, in that case, the liquidation process of the company starts. Secondly, when there is no resolution plan is received. So when there's no resolution plan, in that case, the company slips into the liquidation. When resolution plan is received but not approved by the COC, in that case as well, the company slips into the liquidation. When resolution plan is received and approved by COC but not approved by the adjudicating authority, in that case as well, the company goes into the liquidation. And last but not the least is the resolution plan approved by the adjudicating authority, approved by the COC, but is contravened by the resolution applicant or is not compliant by the resolution applicant. So these are the common circumstances in which company goes into liquidation. Can a company goes into liquidation directly without following the CIRP at all? The answer to the same is no. Even if the situation of the company is such that following the CIRP path will not fetch any value at all, in that circumstances as well, it is essential to first file for the CIRP only. And then when it will be decided by the COC that there is no time, there is no viability in the CIRP process or following the detailed CIRP process, it's better to take the company into liquidation only. Then COC can decide to take the company into liquidation. Then where application made upon the decision of the company of credit, upon the decision of committee of creditors to liquidate before CIRP expires, in that case, that application, particularly the application to be made by the adjudicating authority, particularly should mention about this detail. And this application has to be made after the constitution of COC, but before preparation of IM, before inviting any expression of interest. So why after constitution of the COC? Because ultimately this decision to put the company into liquidation will be taken by the committee of creditors only. So it is mandated, it is required that once the COC is formed, then let the decision be taken by the COC to decide whether the company should follow the CRP process or the company should follow the liquidation process directly. There are different pros and cons which are provided for the purpose of CIRP, for the purpose of liquidation. When it comes to CIRP, the CIRP is, as I said, is about a option given to the corporate debtor, is a step taken by the resolution professional to revive the company, to give a chance to the company to revive. However, when the chance is not there, when it is not possible for the company to revive, in that case, the company slips into the liquidation process. So revive, when it comes to CIRP process, there is a bifurcation provided between the types of creditor. This difference between the financial creditor, operational creditor subsists during the CIRP process. However, this difference is not there when the company slips into the liquidation. In that case, it's secured or unsecured creditor. And accordingly, as per the priority provided in section 53, the waterfall mechanism which is provided in section 53, the liquidator distributes the realized proceeds. Coming to the next slide. So let us quickly discuss about the process that we follow for the purpose of liquidation. Once a company slips into the liquidation, what process we follow? So the common process is that once the liquidator is on board, the liquidator, the very date of admission of the order is the liquidation commencement date. Once the liquidator is there, the liquidator is required to make the public announcement for the purpose of inviting claim from the respective claimants, and the claimants are required to submit their claim as on the liquidation commencement date. So this is again is mandatory because it has been seen that the claimant often come post the last date of submission of claim, and they file the claim as on that day and not as on the liquidation commencement date. So it is pertinent to note that the claim has to be as on the liquidation commencement date only and not a date after that. Then, so making the public announcement is the very idea behind making public announcement is to inviting the public at large, to inviting the stakeholders at large to submit their claim before the liquidator, so that the liquidator can collate those claims and prepare a list of stakeholders. There's a timeline of 30 days which is provided in law. So this 30 days timeline is for the purpose of acceptance of claim. So it has also been seen by the insolvency professional. I am sure that the insolvency professionals who have joined this webinar, they also must have faced this circumstances that more often the tax department or the government officials, they come up with their claim at a later stage and not within this window of 30 days. So the power with the liquidator is to accept the claim is for this window of 30 days only. So if the claim is coming within this 30 days period, as a liquidator, we can accept the claim. What about the claim which is coming after that? For the claims which is coming this after this 30 days period, for that we have to go, the respective applicant or the respective claimant has to go to NCLT to condone the delay. And if at all that delay is condoned by the NCLT, then only the liquidator has power to accept that claim. So based on this claim submission, the liquidator prepares a list of stakeholders and constitute SCC, Stakeholder Consultation Committee. As the nomenclature demonstrate, it is about consultation, stakeholders consultation committee. So the very idea behind having this committee was to give advice to the liquidator as and when the liquidator requires advice. But now, as per the changes that has been introduced in law, it is not limited to the advisory part. We will see it in a later part of the session that the role of stakeholder consultation committee has moved from being on the advisory role to become a decision-making body. So now SSC is slowly becoming equal to the COC in CIRP and has started intervening or has started dragging their role towards a decision-making body, and it's not limited to the advisory role only. Now, when the SSC is constituted, after that, what is the role of liquidator? The role of liquidator is to determine the liquidation state, what to realize. So what exactly, what is within my domain, what all I can realize, so that domain has to be decided that these are the assets within my domain and these are the assets on which I have a right, which the corporate debtor basically has a right, and that can be realized by the liquidator. Something which is not within the domain of the corporate debtor, which is not on the asset on which the corporate debtor do not have a right, that part cannot be realized by the liquidator. For instance, the gratuity fund, this pension fund, this provident fund, these are not within the boundary of the liquidation estate, and therefore this cannot be realized by the liquidator. Neither this can be distributed by the liquidator. So what can be realized? Only those assets which falls within the ambit of this corporate debtor's property, only those property can be realized by the liquidator. So the formation of this liquidation estate is to what to realize. So this formation is the next job of the liquidator. After forming this, preparing a prelim report with asset memorandum that provides the list, that provides the details of asset, of what all assets are there, what could be the prospective realizable value of those assets, and in what manner the assets can be distributed. That gives a prelim idea about the liquidation process. So given it is a prelim idea, that is why it's called preliminary report. Then next comes this sale process. So what are the manner in which these assets can be realized? Some assets can be sold by way of piecemeal basis. Some assets can be sold collectively by way of a slump sale basis. Earlier, in fact, as of now, there is a provision of going concern sale, but eventually it is proposed to remove this concept of going concern sale altogether from the perspective of this mode of sale. So if that option will not be there, in that circumstances, the company will only have choice, or the creditors will only have choice to revive the company during CIRP only. And this option to revive the company during liquidation will not be there altogether. This going concern sale concept is not there. Currently, it has been proposed to remove this going concern sale part. However, this proposal has not yet been amended. Till the time the amendment is not coming, of course, the process is ongoing. This process is there and can be opted. But once this amendment is being introduced by IBBI, after that, this option of going concern sale will not be there at all. So to determine as to what will be the proper as process to realize the asset, or in opting which particular option the realization will be maximum, that is again is the role of insolvency professional to determine as to in what way the asset has to be realized. So the sale of the liquidation estate, what will be the manner or the mode in which a particular asset, list of asset, set of asset will be realized, has to be determined by the liquidator. Of course, in that part as well, SCC plays a major role because the entire consultation is with the SCC only, and given the recent enhanced power given to the SCC, liquidator is required to consult with SCC in every aspect as to what is a value which has been determined by the valuer, then what should be the terms which will be put in the EOI. Then if the EOI has been received, then consultation with respect to the prospective acquirers as well. So all these consultations are now required with the SEC. So this discussion, after this discussion, the realization, so opting that particular mode and then realizing the particular assets. After realizing the particular assets, now comes the most important task, which is distribution. So to distribute the realized proceeds. For this distribution, there is a hierarchy provided in section 53 of code, which is a waterfall mechanism, which provides that given that there is a limited food in the table, then you have to distribute the food in a manner which is provided in the law itself, so that there should not be any clashes between the creditor. So if given there's a limited realization, so those limited realization has to be distributed among the creditors in terms of the priority which is provided in section 53. And of course, given that it is limited, the realization is limited, the respective creditors have to take the haircut. Then after this distribution process, the role comes with respect to final report. So final report contains the entire process followed by the liquidator as to how the liquidation estate was formed, what all assets included in the liquidation estate, how those assets have been realized, in what manner distribution has been processed, and whether at all there is any fund kept aside by the liquidator or the liquidation account is closed. So this entire detail will be there in the final report. Based on this final report, dissolution application will be filed. If, as of now, since going concern option is still there, so if at all the company is opted for going concern sale, in that case, dissolution application will not be there. In that case, confirmation, sale confirmation application will be there, but final report has to be there irrespective of the fact whether you are opting for dissolution or for the confirmation of sale. So this application has to be filed to the NCLT, and NCLT, after going through with the entire details, entire mode that has been followed by the liquidator, at the end, declare the company as dissolved or takes the sale, the confirmation of sale on record, as the case may be. So this is the brief of the process that is to be followed in case of liquidation. However, while following this process, there are several difficulties followed by the insolvency profession. I'm sure that all the participants here, being insolvency professional, must have faced different kind of difficulties while pursuing their respective matters. So some of the difficulties that we have faced will quickly brief on the aspects that we have faced while pursuing the matters with respect to liquidation of the company. So to be very to start with, the very initial matters are with respect to the claim, because often we have seen that the creditors comes for, or the stakeholder comes up with their claims after the last date, so they are not coming within the due date time. What to do after that? Especially the issues been faced with respect to the claims of workmen, employees, because they are not aware as to what to fill in the document. They more often they come up with a claim with via their authorized representative, and they provide a limited information in the document, or sometimes they provide the information which is not relevant. Sometimes they provide the information which which is beyond what is provided in law. So we have to make them aware that the claim has to be till this extent only. Then when they claim towards their gratuity dues, towards their provident fund dues, towards their retrenchment compensation, towards their pension fund, etc., then we have to see that if at all there is a fund or not. Because there again the provision says that if there is a fund, you have to distribute from the fund. If there is no fund, in that case, what will happen to the shortfall in the fund? So that shortfall, whether we have to make contribution towards a shortfall, whether at all the circumstances were such that the corporate debtor was required to have a fund, or the obligation was there to have a fund, but the corporate debtor has not created any fund at all. However, the workman has filed a claim with respect to their provident fund dues, gratuity dues, or pension, or now claiming their pension at this stage. So how to deal with those aspects? Because law is not clear, law is not providing particularly or dealing with these kinds of practical aspects as of now. Then the verification of claim. Sometimes what happens is we accept the claim based on the books and records of the corporate debtor. However, it may be a possibility that the books and records of the corporate debtor are not updated or have not captured a particular part which should have been captured. In that situation, how to deal with the claim, whether to rely on the documents that has been submitted by the respective workman or employee, or to go by the books and records of the corporate debtor as available, as the last available books and records of the corporate debtor. Because we have also seen this part as well, that books and records of the corporate debtor pertains to, say, suppose financial year 14-15. After that, they have not prepared any financials at all. However, the company slips into the liquidation in financial year 20 or 21 or thereafter. So we cannot rely on the books which was as on 14-15, and the company has not prepared any financials thereafter, because the company was in operation maybe thereafter as well and have skipped to prepare their financials. So how to deal with those aspects? Then, unlike CIRP, in the liquidation, there is a separate role of creditors. There is no more differences with respect to the financial creditor or operational creditor. The creditors are either secured or unsecured. If the creditors are secured, in that case, to making them aware about the provision of the court, that they have a limited time to decide whether they want to realize the asset, the security interest, or they want to relinquish the same. If they want to realize, then they don't want their asset to put into the common pool. In that case, they again have a limited time within which they have to realize those assets, and they have to make certain contribution to the liquidation estate as well. It's not that they can just simply decide that I'll realize out of the liquidation estate and I have nothing to do with the liquidation estate. So that is not the rule. The thing is about, even if they decide to go outside the liquidation estate, then also there are certain rules and regulations that they have to follow. There are certain timelines that they have to follow, that they have to, even if they are realizing outside the liquidation estate, they have to make certain contribution towards the liquidation cost, towards the liquidation estate as well. So to make them realize about this intricacy, these things that they have to realize the assets, there is a limited timeline. And if say suppose the secured creditor says that the asset is of worth, say suppose 100 crore, they are saying the secured creditor comes up saying that I have a buyer and I intend to realize the asset outside the liquidation estate for 70 crore rupees at present. Given the timeline is very short, the timeline is 30 days only. So I'm communicating this to you that I can realize the asset at 70 crore. Now again, there's a role of liquidator to see if at all the liquidator can come up with a higher cost or not, or with a with a bidder, with a buyer having a good value or more value than the value that has been quoted by the respective secured creditor or not. So liquidator has a say here as well, saying that if you have a buyer of 70 crore, look, I have a buyer of 100 crore, or look, I have a buyer of 90 crore. So you better sell the assets to this particular buyer, not to your buyer, so that the realization can be more than what you are expecting or more than what can be realized from the particular asset. So here is also the role of, is a major role of liquidator to decide about this aspect. Then coming to the liquidation state, so forming and deciding as to what all assets will form part of my liquidation state is again is a task for the liquidator to decide as to this particular asset. Say suppose if there are certain land which was given on lease, then whether what will happen to that leased land, whether that leased land will also be treated as a part of liquidation estate or not. If say suppose there is a freehold land, building was constructed thereon, while the land was of corporate debtor, but the building constructed thereon is not pertain to the corporate debtor. So how to deal with that particular part? So there can be several these kind of practical difficulties as well. Then the role of given liquidator is acting as a fiduciary.
Madam, I have one question.
Yes,
Hello, there is one question, madam.
yes, sir.
What is the, because there is a voting share difference is there compared to COC. Is it so? In liquidation, all stakeholders have a voting share as per the claim, na? In case of
SCC, that depends upon the constitution of SCC as to how you have constituted the SCC. So if SCC is at par with what you have constituted during COC, that now the provision requires you to have the SCC as a replica of COC only. If that be the case, then certainly the percentage will be same. Otherwise, that will be in terms of the formation of SCC only.
my question is, in CRP, the only the secure creditors has a voting share. In liquidation, all creditors have voting rights, no?
That it is not this case. In CIRP, there is no concept of secure creditor at all. In CIRP, it's financial creditor or operational creditor.
Okay.
And the COC is majorly being formed by the financial creditor only, until unless there are no financial creditor in the company. If the circumstances is such that there is no financial creditor at all, in that case, the COC will be formed by operational creditor. So there is no concept of secured or unsecured creditor when the company is doing in CIRP. When the company is in liquidation, in that case, the concept of secured and unsecured creditor comes into the picture.
But voting share will be different liquidation, no?
The voting share will be as per their participation in the SACs.
Okay. 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 Thank you.
And coming to this next part after this liquidation state formation,
Madam, voting share should be as per the claim of the operational creditor
during liquidation, sir, because that will be the base. That will be the base of formation of SC.
Yes.
Now coming to the realization and distribution part. So here again, the major role of liquidator to realize the assets, to first decide as to what will be the optimum mode, what will be the particular mode to realize the assets, whether to go for going concern sale, whether to sell a particular undertaking, if at all there are separate undertakings in the corporate debtor, then to decide whether to sell a particular undertaking by way of a going concern sale and sell rest of the assets by way of slump sale or piecemeal. So what will be the best mode in which maximum realization can be done? That is again a major role, major part to be played by the liquidator. And then regarding the distribution of the proceeds, because the major tussle come at this stage only, the distribution process. Those who have seen the practicality or in practical the liquidation process, they also know that the secured creditor, mostly the banks and NBFC, they hardly care about what is happening during the process. They of course need update about the process on time to time, but the main agenda is the realization as to how much we can realize, in what manner we can realize, what is happening to this particular asset, etc. And why you have not opted for this mode. This mode could have given fetch a better value to you. So to have that proper explanation that this particular part is there and I have opted for this particular process, given that this is the best or optimum process to opt for. So these are the important aspects that requires deliberation. These are the important aspects that requires necessary changes in the law as well, so that there can be more clarity. Currently, what is happening is, while we all are following a law which is provided in Insolvency and Bankruptcy Code, read with the respective IBBI liquidation process regulations. However, when it comes to these practical difficulties, we follow the practical route only. And that practical route varies. Everyone has their own set of mind. Everyone thinks that this can be done, this particular option can be opted. See, this has happened in a particular case, so we can opt that particular process. So there is no parity in the process being followed by the respective insolvency professionals. While I do understand that insolvency is a practical case and has to be dealt in the practical manner, however, at the same time, the parity in the process to be followed by the professionals is also important. So those aspects which are recurring in nature and requires attention of the Insolvency and Bankruptcy Board of India for the sake of clarity, I believe that that clarity should be. Henceforth, from now onwards, my colleague Neha Malu is there, so she will carry on with the practical or potential area of discussion, and I'll intervene as and when required. Thank you. Neha, you can continue.
Thank you, ma'am. Ma'am, I have one question. Can I ask? In my assignment, I have been appointed as RP, wherein the suspended director, he is the owner of the land, and he has given the land in lease for the corporate debtor for a period of 30 years. Now, 10 years already exhausted. Now, company is under CIRP. Now, what happens? The land, major portion of the land he is holding. Only a part of land has been given in lease. So, how to take the liquidation estate? Here, it's not liquidation estate. Even when I invite the resolution plan, I have to say what is the property of the corporate debtor, right? So, to ascertain what is the property belongs to corporate debtor, how to proceed with this? That is one question. Second question, ma'am. Second question, the same suspended director, he has initiated individual insolvency before the district court. That is much prior to the commencement of CIRP. Now, whether the RP has power to transfer the pending insolvency proceeding to the NCLT where the CIRP is pending. Because as per the regulation, there is a provision I saw. According to that, wherever the individual insolvency is pending, that can be transferred and tagged along with the CIRP, I mean, before the same adjudicating authority who is handling the CIRP. So whether RP is empowered to file the transfer petition in this case. If yes, before which court, whether it is high court is having jurisdiction, because it is two different districts. Obviously, if different districts are involved, transfer petition should be filed before high court in other matters. What IBC matter. So this is my question, ma'am.
Based on my limited understanding, I'll answer the question. So for the first thing about the asset as to what will be the liquidation estate and what asset will form part of the liquidation estate. So as I said, the asset, to the extent the asset is of corporate debtor, only that particular asset will form part of the liquidation estate, not the asset which pertains to the debtor, which pertains to the director of the corporate debtor. No, if the particular land pertains to the director of the corporate debtor, then it's director's property, not the company's property. If the particular land is of the area of land which is completely on the corporate debtor, that particular part will form the liquidation estate of the corporate debtor.
Okay,
Yes,
ma'am.
of course, the leasehold right will be there. So say suppose if the land is on lease for say suppose 50 years, and as of now only 10 years has been expired. So for the 40 years, the leasehold right is still there. So the right can be transferred. So when you are inviting the expression of interest, you can certainly add that right, that leasehold right in the expression of interest, that this right is still subsisting. So as and when that leasehold right will expire, that after the completion of that 50 years, then the land will again go back to the original lessee. So whatsoever pertains to the corporate debtor will form part of the liquidation estate. This is the answer to the first question. Coming to the second question as to what will happen to the transfer proceeding. So NCLT has the sole jurisdiction to entertain the cases pertaining to the CIRP cases, CIRP of the corporate debtor. And if at all there are cases, which requires transfer, then the case should transfer to the NCLT having jurisdiction on the corporate debtor. So if say suppose the corporate debtor is having jurisdiction in NCLT Kolkata and the CIRP process is already initiated therein and the simultaneous proceeding is going on before any other forum, then transfer proceeding can be filed in that particular forum to shift the proceeding in the respective corporate debtor itself, so that one single proceeding can be moved ahead before the particular jurisdiction or before the particular NCLT having jurisdiction over the corporate debtor. I hope I'm clear on these questions.
Ma'am, you are trying to say that the petition can be filed only before NCLT, not before High Court.
Ma'am, transfer will happen in the respective forum and that petition will come to the NCLT. So because the process is going on, as you said that the process is going on before the High Court, then that transfer has to be made from the High Court to NCLT so that the process can be continued before the NCLT.
Got it, ma'am.
Continue further. Yes, Neha, you can continue now.
Right, so maybe I'll take the discussion forward to the potential areas of discussion. So till now, Barsha has basically given us an overview of what exactly is liquidation, what are the potential roadblocks that we kind of come across when we are doing any liquidation, when we are conducting any liquidation process. So here onwards, I'll be taking up certain pertinent points which requires discussion. So liquidation as a whole, there are several processes in between. There are several sub-processes in between where there are potential challenges. However, for the purpose of today's discussion, we have kept ourselves limited to the major issues that IPs face while conducting liquidation. So I'll be starting off my discussion first with secured creditors. So claim collation and verification basically. So in as per the process provided under IBC as well as the liquidation process regulations, the once the liquidator is appointed pursuant to the order of NCLT, he needs to do a public announcement inviting claims from all the stakeholders. The timeline for the stakeholders to submit their claims is 30 days from the commencement of liquidation, and thereafter the liquidator gets another 30 days for the purpose of verification. So all in all, it is 60 days from the liquidation commencement date for the purpose of collecting and verifying the claims on the part of liquidator. However, in this simple process also, there are several practical difficulties that come in between. So most of the IPs must have experienced this thing that when it comes to dues from government departments, it generally come after several months from the last date of receipt of claim or for submission of claim by the concerned stakeholder. In that case, can we say that liquidator be empowered for the purpose of condoning the delay that has happened because of delayed submission of claim? That is one of the questions that has come from the simple provision that we right now understood. The second point is with respect to verification of claim. So the liquidation regulations also provide that while the liquidator is verifying the claims submitted post commencement of liquidation, he also needs to verify the claims which are submitted during CIRP. So the liquidator is under the obligation to also verify the claim collated during CIRP but not submitted during liquidation process. So here a question that might come is the value of the claim might have changed when the company was into CIRP versus the company versus when the company has slipped into liquidation. Right. So first of all, when it comes to delayed claim, section 42 of the code is very clear that for the purpose of condonation of delay, NCLT has the sole authority. However, we'll also look when we move ahead with our discussion, we'll see that the average time which is being taken for the purpose of completing the liquidation is far more than the statutory timeline. And these delays are happening primarily because of delay at the bench. So every matter takes several hearings for reaching its conclusion. Therefore, if we say that this kind of procedural part, for example, condonation of delay, if that can be shifted from NCLT to liquidator, so that point can actually be, considered by IBBI whenever they are coming up with further proposals and amendments. So this is with respect to the first issue, which was with respect to claim, inviting the claim and claim collation. Next, we move on to another important aspects which deals with secured creditors.
Madam,
So,
I have a
as
question.
yes, ma'am.
Like in CRP, if there is a delay in receipt of the claim, the RP has to approach the NCLT as per the new amendments in 23 to NCLT for condonation. Now, the same is applicable in liquidation or not?
So, ma'am, if the claim is not submitted within 30 days from the liquidation commencement date, then there is a case of delay in submission of the claim by the stakeholder concerned. And in that case, the stakeholders need to file an application before
Okay.
NCLT.
Okay.
It's not the obligation of the liquidator, it's the obligation of the stakeholders who is submitting the claim.
But
Okay.
my question is, if they are not at all submitting the claim, those who are CRP creators are there, they are not submitting the claim in liquidation in spite of the period is expired. So what is the status
In
then?
that in that case, pursuant to what is mentioned, the provisions, the liquidator is to consider the claim which was submitted during CIRP for the purpose of admitting the same at the liquidation stage.
Even if it is not submitted by them.
If it is not submitted, then sir, they lose the right to receive the money because if we need to look at the practicality of the situation as well, liquidator is someone who is outside of the corporate debtor and he's a court-appointed officer. So he cannot be expected to know each and everything. And like in several cases, there are inadequacy of supply of documents as well. So if the claim is not submitted by the stakeholder concerned, if the details is not coming out of the books of accounts of the corporate debtor as well, in that case, the stakeholder concerned loses his or her right to receive the funds out of the liquidation estate as per the priority.
Yeah, but one side you say that CRP claim you have to consider, and after that claims are there, but they are not submitted in liquidation. Major person
That claim liquidator will have to consider, sir.
means,
So
so
this
if I
is
am
coming from
considering the CRP claim, but they are not submitted in liquidation, you say that they are not submitted, but I have to consider it.
this is coming from regulation 30 of liquidation regulations, sir. So they need to consider the claim if it is not submitted during liquidation but was submitted during CIRP. This is coming from regulation
No,
30
that
of
liquidator will get a doubt whether it was off the record they might have settled. That's why the creditor might have not submitted during liquidation.
sorry, sir, I could not get your question.
The other gentleman is asking, say ARP they have submitted, but they have not submitted during liquidation. And you are saying that it has to be considered. But what my
Yes.
issue is that suppose if the debtor and creditor have settled their claim off the record, that's why that may be the reason why they have not submitted the claim during the liquidation.
Now, what happened that there may not be secure creditors and all operational creditors there, and they think that they will not getting anything.
We'll get a
because they are-
doubt that they might have settled it outside of the record.
So, sir, Regulation 12 reads as follows that where a
Yeah, that is
stakeholder does
there.
not submit its claim during liquidation process, the claim submitted by such a stakeholder and
Like-
duly collated by the interim resolution
Yeah,
professional
that is true.
or resolution professional.
But what I am saying is when there was no claim from the creditor during liquidation, I think we need to contact the creditor for not submitting the claim during liquidation.
But we have made a mail, but they are not submitting.
That means
But
they
so
might
they
have.
submitted it, right? Yes, sir. If you can maybe complete your question.
Sir, tell her, madam.
Sir, so your limited question here is what if the creditor concerned has submitted during CIRP and he is of the opinion that he will not get anything out of the liquidation estate and that is why he does not submit the claim during liquidation. I hope this is the question, right?
Yeah, correct. That is my reason only that that's why he's not submitting, because there is no asset and there is no financial creditors. So in that he might be required to contribute in a liquidation cost. So that's why they are not submitting the claim. So what to go ahead with that?
So, sir, the situation, as Neha has also explained, that if say suppose a particular creditor has submitted claim during CIRP but failed to submit claim during liquidation, as one of the participants said that in that case we are required to contact the creditors. Now, say suppose there are 1,000 creditors submitted claim during CIRP. Say suppose workmen, they have submitted claim during CIRP, but they have not submitted their claim during liquidation. Are we required to call those 1,000 creditors to submit their claim during liquidation? The answer here is no. Given that the regulation itself now provides that if the claim was submitted during CIRP, even if the claim is not submitted during liquidation, that has to be accepted by the liquidator. So here, of course, the task of liquidator is being enhanced a bit, that you have to see your claim, the claim which is being submitted in terms of the public announcement made by you, as well as you also have to see the claim which has been submitted as per CIRP. So what exactly you are making the public announcement for? You are making public announcement to invite the claimants to submit their claim, to invite those claimants who had submitted their claim during CIRP to submit their updated claim as on the liquidation commencement date. So the only factor that will remain will be that the claims which were submitted during CIRP, if they have not submitted their claim afresh during liquidation process, in that case, their claim will be as on the date of CIRP and not as on the date of liquidation commencement date. So this particular window will be there. So they will not get this opportunity to condone this particular part or to have this particular part added in their claim. So the liquidator is required to accept the claim as on the CIRP commencement date, but that claim has to be accepted irrespective of the fact that they have not submitted their claim upon commencement of liquidation.
We have to accept the claim and go ahead with whatever the claim submitted, CRP and liquidation, all this collated, and that will form a SCC meeting.
So this collation part again has become a task for the liquidator, sir, that you have to see the claim that you have invited, and based on that, you have to prepare the creditors list. You again have to see the CIRP process. You have to see as to what all claims were accepted by the IRP or RP, as the case may be at that time. You have to see that if there is any kind of contradiction between both the claims. If so, then the latest claim has to be accepted. If the claim is not submitted during liquidation but was submitted during CIRP, then you have to accept that claim which was submitted during CIRP. So this task has become a bit lengthy, but now the provision says so. So we have to bow down to the provision.
So conclusion is that the SSC consists of the claim submitted during CRP and also in liquidation after collating the same.
So if say suppose the claim was submitted during CIRP, they have again submitted claim during LCD. So there is a difference between the two, because during CIRP what they had submitted was as on the CIRP commencement date. And now during liquidation what they are submitting is as on the liquidation commencement date. So there now we all know that between this CIRP and liquidation there's a huge gap, at least a gap of a year. So that year of interest may be added thereon and they can submit their updated claim to the liquidator. So if they have submitted their updated claim, in that case, of course, the liquidator has to accept this updated claim. So the updated claim will be there in the list of stakeholders.
If not, then previous one.
Sorry, sir?
Submitted updated claim, then whatever the claim submitted during CRP and actually correlated, then that will form a SCC.
Yes, sir. Absolutely.
Ma'am, I have one
Very
query.
much.
Yes, sir.
Ma'am, if the claim submitted by a workman to the IRP and that was accepted by the IRP, but in liquidation process, that claim was rejected by the liquidator. Totally claim rejected by the liquidator without going through the claims accepted by the IRP. But earlier, as you have already stated that the claims which are accepted by the IRP or RP during the CIRP process, those claims have to be considered by the liquidator. It means
It is not about that those claim has to be accepted by the liquidator. There may be a circumstances that now maybe there's some add-on facts which are there based on which the liquidator is now rejecting the claim. There cannot be the sole discretion of the liquidator that I am not going by whatever documents you have provided and I'm straight away rejecting the claim. That cannot be the circumstances because liquidator is also answerable to the stakeholders. Liquidator is also answerable to the NCLT. If say suppose that particular workman goes to the NCLT and says that liquidator has rejected my claim without providing any particular reason thereto, then the liquidator is answerable as to on what basis the claim was rejected. Because now in the liquidation state, the professional who's looking after the process is an insolvency professional. The person who was there during CIRP was also an insolvency professional. If that particular professional has accepted and admitted a claim, then on what basis or on what ground the liquidator is rejecting the claim, that ground has to be there. In fact, the law now says that even if you are accepting or rejecting the claim, you have to communicate the same to the prospective stakeholder. So that communication is important, and that communication should include the basic reason as to on what basis the claim is being rejected. Now, if say suppose they have rejected the claim based on certain facts, certain reason, and that is not acceptable to the workman, then it is always open for the workman to approach the NCLT with the necessary prayers. And if NCLT will think that the claim was legitimate and is required acceptance, then certainly that will be accepted by the liquidator.
okay, meaning thereby we can say the claims accepted by the IRP, it is not obligatory on the part of the liquidator to accept those claims.
It is not obligatory at all, sir. The thing is that if the claim was submitted during CIRP, that claim requires updation. If they are updating, it's well and good. We'll take the updated part. If they are not updating, if they have decided not to update, or if they are not aware of the process at all, in that case, I cannot neglect that part. I have to accept the claim that they had submitted during CIRP, and accordingly, I have to fetch the details in the list of stakeholders that I am preparing during liquidation process. I cannot simply ignore that they had submitted the claim during CIRP and not submitted the claim during liquidation. So that ignorance cannot happen. So it's not that I have to go by what the decision was taken by the IRP. It's not about that. If the updated claim is there, of course, I have the full right to adjudicate the same. I'll adjudicate the same during liquidation process.
Okay, thank you.
Also, one more point
I have a
was
doubt with regard to the extension of liquidation period, ma'am.
yes, ma'am.
Hello?
Yeah, your question, ma'am.
The liquidation period is over. If it is not extended, it means that the liquidator has no authority or he is relieved from the liquidation process.
No, ma'am. So for this obligation is on the liquidation. So for example, the liquidator is of the opinion that the statutory timeline of 1 year is getting expired and the process is yet to reach its conclusion, then it is an obligation of the liquidator to file an application before NCLT for the purpose of extending the liquidation period. The liquidator cannot be expected that if, for example, the application is not filed and the liquidation timeline has got over, so liquidator is discharged of his duties. It doesn't work like that.
Actually, what happens in my assignment, I filed 3 liquidation, third extension also. the adjudicating authority is not extending the time sufficient for completion of the pending litigation. So each and every quarter, I happen to file one extension application and extend the liquidation period. So what to do? Shall I leave it without extending? And finally, once the liquidation process is concluded, can I file one extension application in this matter?
So, ma'am, there are several cases wherein n number of extensions have been sought, like in Kolkata bench also, when we appear on a regular basis, we have observed that 10 to 12 extensions have been filed. So if the adjudicating authority is not granting an extension, then that has also to be justified as to on what grounds this is not getting extended. But as a normal practice, what we have observed is NCLT generally allows extension in the matter.
So we have to file each and every time when it gets expires, right?
Yes, ma'am. Yes, ma'am. Each and every
Thank
time
you.
before it reaches the, the extended period gets over.
Okay, ma'am. Thank you.
Yeah. And with respect to one of the questions which was asked earlier, say, for example, the stakeholder concern is of the opinion that he is not going to get anything out of the liquidation estate. So that does not discharge liquidator from his obligation to prepare the list of stakeholders. So in most of the cases, we can also see at the statistics released by IBBI every quarter, in most of the cases, not even the second priority creditors get the full amount of their claim. So just because, so that does not mean the stakeholders on the lower priority under Section 53 does not need to file the claim at all. So preparation of the list of stakeholders and the list of claimants is the obligation of the liquidator, and he cannot be discharged of this obligation certainly because of the fact that the realization out of the liquidation estate which will be so small that not even the second priority creditors will be paid in full.
Yeah, but still, miss, they are not submitted. That's why we are not considered. But the question you already solved that. Once they are not submitted, we have to consider it as CRP claims are there. Okay.
Yes, sir. We have to consider the CRP claims.
Thank you.
So I'm moving forward to now secured creditors. So as Barsha rightly pointed out earlier, that the relevance of whether a creditor is secured or unsecured is not of much importance when it comes to CIRP, because in CIRP the COC is formed out of all the financial creditors. But when it comes to liquidation, whether a creditor is secured or unsecured is of much relevance, because secured creditors get a higher priority in the waterfall if they have relinquished the security interest. And if they're realizing their security interest out of the liquidation estate, then they can actually move out of the liquidation and realize it separately. So as the slide also suggests that when it comes to secured creditors during liquidation, they have two options: either to realize the secured asset outside the liquidation estate, or under liquidation, that is relinquishment under the common pool, which is the liquidation estate. But it is to be noted that if the liquidator is relinquishing the security interest in the common pool, it will get higher priority, that is second priority in the waterfall mechanism right after the liquidation cost and at par with the workmen due so past 24 months. But if the secured creditors opt to realize the assets out of the liquidation estate, then for the amount which is balance to be realized, which will that will go in the fifth priority of the waterfall mechanism. We'll also understand about this particular hierarchy and what will happen if the security debtor goes for realization versus relinquishment by way of a numerical example. So on the left side of
Ma'am,
this,
sorry to interrupt, ma'am. Only one question. See,
yes,
ma'am,
ma'am.
in case during the CARP, there is a sole financial creditor who used to vote and they are holding 100% shares during COC, in the COC. Then once the company goes into liquidation, they are not secured financial creditor. They are also unsecured. There is no asset at all. In that case, when we constitute SCC, so should we give equal number of rights to all the classification for all the class of creditors?
Right, ma'am.
One
Right,
financial creditor, one operational creditor, one government stakeholder, one workman. Like that, we will nominate one person from each of the class. In such case, how should we proceed with the voting?
So, ma'am, when it comes to SCC, so there are certain gaps in the provision which is provided in the liquidation regulations. Maybe I'll highlight one after other. So, liquidation regulations provide for constitution of SCC with all the creditors of the corporate debtor. Even the promoter, directors, they can form part of the SCC without voting rights. But here the question comes, what, like in your particular case where you mentioned that the creditor was a unsecured financial creditor, so he had rights during CIRP. But when it came to liquidation, because he is unsecured, his priority went below in the waterfall. But that does not exclude that particular creditor from becoming a part of SCC, because SCC forms part of all the creditors, whether they are secured, whether they're unsecured, operational, or financial whatsoever. Right. So now the question would come, on what basis will we derive what is the voting share of that particular creditor? So that in my opinion should be as per the, I mean, money which they should be getting out of the liquidation estate, and the voting percentage should be directly linked to Section 53 uh, of IBC. Now, if I put it in simple words, so what I'm trying to say is all the creditors, they will form part of the SEC, but to what extent they will have the voting right, that should be dependent on what is their realizable value out of the liquidation estate.
But
However,
normally all stakeholders have voting right now based on their claim, whether they are getting, suppose there is a financial creditor, secure financial creditors also there, but all are getting rights, but waterfall mechanism, unsecured creditor will not get anything. So based on 53, it cannot be, na. The voting share depends on their claims only, na.
So basically, sir, to address your question, Regulation 31A clearly provides that the voting share shall be as per the admitted claim of that particular creditor. But for example, there's a secured creditor who have realized the secured asset out of the liquidation estate. So in that case, that particular creditor will have no right in the SEC meetings. But if I talk about the voting right, so Regulation 31A, maybe I'll just help with the exact provision. Regulation 31A Sub-regulation 2 provides that the voting share of member of consultation committee shall be in proportion to his admitted claim in the total admitted claim, provided secure creditors who have not relinquished the security interest, that is, who have realized the security interest, shall not be a part of consultation committee and hence will have no voting rights. And promoters, directors, partners, or their representatives may attend the meeting, but once again will have no voting rights. And the financial creditors who are related parties shall also not have any voting right in the SEC.
Based
I
on
hope that
voting,
clears.
yeah, both one on the voting share and the person, financial creditors who are not relinquish his rights, they have voting rights. Okay.
They will have no voting right. If they are realizing it outside the liquidation estate, they will have no voting rights in the SEC.
Yes, correct.
Right. So, for the purpose of now understanding,
Ma'am,
I'll
sorry.
basically.
So,
Yeah.
ma'am, in a discussion where the operational creditors are insisting for forensic audit to be conducted, in that case, should the liquidator go with the voting of all the stakeholders? Should we consider voting of all the stakeholders or only the decision of the financial creditor? Because financial creditor is the only person who is bearing the liquidation expenses. So in that case, should we consider the voting insistence by the operational creditor, or shall we go ahead with the decision of the financial creditor?
So, ma'am, one clarification which I need. So, right now you're talking about liquidation process, right?
Yes,
In case of
liquidation process only, but
right.
but who is
I
doing
got your
CIRP,
question.
forensic auditor was not appointed. So operational creditors, they have requested the liquidator to conduct forensic audit against the promoters.
I got your question, ma'am. So, when it comes to liquidation, there is stakeholders consultation committee, right? So the name of the committee is consultation, and as per the last amendments which have come, even for the smallest of the matters, even say for example you're wanting to engage a professional, you need to take consultation from the SCC, right? So whatever even if you're going for appointment of the forensic auditor, you need to take approval by way of 66% of the stakeholders. But in case you would want to deviate from the decision which is taken from the taken by the stakeholders, there is a possibility, however, which follows with certain obligations on your part. So first of all, if you deviate from the decision which is taken by SSC, you need to report the same to NCLT and IBBI within 5 days of deviation, and you also need to report in the next progress report. So here, for the purpose of appointing the financial creditor, the answer is yes, you need to consult the SCC, but the decision of SCC, but you're not under the obligation to go by what the SCC is saying. However, in case you deviate from the decision taken by SCC, you need to do the proper reporting as provided in the regulations.
But in case of forensic audit, there is an obligation on the part of IPN liquidator to have an opinion that whether to go for make an application for POF, and that is obligation on the liquidator also, and IP on share.
So the reason behind conducting the forensic audit is to identify the avoidance transaction. So the responsibility of identification of avoidance transaction is not only on the resolution professional but also on the liquidator.
The obligation, so no need to have a specific consent we have to take, but there is obligation we have to first decide, and then consultation committee will come into picture.
Right, so. But it is the obligation of both the resolution professional as well as the liquidator for the to identify the avoidance transaction, that is preferential, undervalued, fraudulent, and extortionate credit transactions.
Thank you.
Right. So, for the purpose of understanding the priority and how much share will go to workmen and what will happen to the secured creditors if they realize or relinquish the security interest, I have prepared a small numerical example. On the left side of the screen, you can see there is a secured creditor which has lent 100 crores to the corporate debtor against the strength of secured asset, which was at the time of taking the loan of 125 CR. Once the company has slipped into liquidation, the value of that secured asset has dropped from 125 CR to 80 CR, and the amount eventually which will be realized will be 70 CR. So this is the facts of the case. Now the value of secured creditor here is 100 CR and the dues of workmen is 40 CR. So to put it in simple words, claim of the secured creditors is 100 CR, the claim of workmen for past 24 months is 40 CR, the amount actually realized from the secured asset is 70 CR. So now the pertinent questions are also listed on the right side of the screen. First question is, to what extent is bank limited secured? So bank limited here is the secured creditor of the corporate debtor. So even if the value of security which was provided for taking the loan has slipped from 125 CR to 80 CR, does not restricts the right of the bank to be classified as a secured creditor to the extent of loan extended by it. So the answer to the first question would be 100 CR. Bank limited will be treated as secured creditor to the extent of 100 crores of the loan which was disbursed by it, irrespective of the fact that the value of security which was provided for taking the loan has slipped down from 125 CR to 80 CR. Second question is, can bank drop an asset of 70 CR in the liquidation estate and claim 100 crores in priority even from the unencumbered asset? So the moment the secured creditor decides to relinquish the security interest to the extent of loan extended by it, it will be classified as a high priority secured creditors and will be paid at par with workmen in the second priority in the waterfall. That is right after the liquidation cost. The third question here is, what would be the workman's portion if bank limited relinquishes the secured asset? So if bank has relinquished the security interest, which means liquidator is realizing the asset, and after realizing, the liquidator could realize 70 CR out of the asset. Now, out of the 70 CR which is realized, it is to be divided in proportion between the secured creditors and the workmen. So the ratio here would be 5:2. And why 5:2? Because we are dividing 100 CR of the secured loan with 40 CR of the workman's claim. So 100 is to 400, 100 is to 40 comes to 5:2. The amount of 70 CR, which is realized out of the secured asset, after deducting the first priority dues, that is the liquidation cost, the balance amount will be distributed between the secured creditor and the workman in the ratio of 5:2. The next question comes, what if the secured creditor decides to realize the asset? That is, go under section 52 5BC and decides to realize the asset out of the liquidation estate. In that case, my answer would be, so the liquidation regulations clearly provide that if the secured creditor is realizing the asset outside the liquidation estate, in that case also, it needs to provide for the proportionate value of liquidation cost and workman's share. So that does not mean that if the secured creditor is realizing the asset of 70 CR outside the liquidation estate, he'll get all the 70 CR. From that 70 CR, he needs to also provide the funds separate for liquidation cost, that is the first priority dues, and also the workman share, which will be in proportion to the amount realized. Now, next question is what happens to the deficit claim? So here the workman would get just say 20 CR, less than 20 CR after we deduct the first priority dues. So the balance amount will actually be a haircut on the part of workman as well as the secured creditors. Now, moving on to the next point is with
So my
respect to
question is that you have decided the ratio based on their claims. Suppose their loan is suppose you said 100 crore loan, means
Yes.
they have claimed 100 crore as their claim. Based on
Right.
that only we are considering their ratio. Na?
Correct, sir.
Okay.
Correct, sir. And we are not moving down from 100 crores to 80 crores or 70 crores
Hmm.
just because of the fact that the secured asset against which the loan was given has fallen down.
Hmm. So we
So
are
we'll be
consider only the loan portion only. Don't consider
right,
about
sir.
the falling of any whatever the price or secure assets are there. We don't
Right,
consider about that. Okay.
right, sir. Now I'll maybe take up one more example. Say this particular bank has given two kinds of loan. One is secured loan, one is unsecured loan.
Hmm.
One is of 100 CR and one is of 50 CR. So while calculating the ratio between bank and the workman, we'll not be considering 150 and 40. We'll be considering 140 because bank was secured only to the extent of 100 CR. The balance 50 CR was actually an unsecured loan.
Okay, got. The only problem is here that suppose 24 months prior to the liquidation commencement, actually the CRP period also extend to more than 1 or 2 years. So this 24 months to whether CRP period also covers that. So how to
It
go?
also gets covered.
So
Yeah, it
that
also
then they will
gets.
not get anything if during the suppose this more than 24 months prior to the liquidation there is a CRP, and then how to then go
Sir,
ahead.
for the, say for example, the workmen were not paid for 3 years. So
Hmm.
24 months means two years. So 2 years dues will be paid in priority and the balance 1 year dues will go under lower priority.
But 24 months doesn't fall because they have company was closed before CRP also. So
But sir, that actually depends on case to case basis because in certain cases, the corporate also remains in going concern. And in fact, the idea is also to keep the corporate in going concern during CIRP. So
sometimes
that
it
would,
is some if it not at all there it is not going concern.
even if it is not in going concern, then also we need to factor in that particular period of CIRP.
Okay.
Right. Moving on to the determination of workman share. So this we have already discussed that like right now we discuss about the workman share. I'll maybe move ahead to another important point, which is inter se priorities and rights of secured creditors. So when it comes to security interest, say for example, there was a corporate debtor which had a land worth rupees 1000 CR and it had taken loans from 5 different parties, and for taking the loans it has actually provided the same land as a security. So what will happen? So there could be either superior inferior rights between the secured lenders or they can be pari passu this secured creditors. So first question is with respect to what will happen if this there are so maybe I'll point my question again once again. There's a corporate debtor which had a land worth rupees 1000 CR On the strength of that 1000 CR land, it has taken loan from 5 different creditors. Now say all of these 5 creditors are pari passu creditors. Matlab the right, all the 5 creditors over the secured asset is equal. In that case, if 3 of the creditors decide to realize the assets and 2 creditors decides to relinquish the assets, so what will happen in such scenarios? So for law does not, IBC does not provides clarity with respect to pari passu or superior inferior creditors. In that case, we can actually look at section 13/9 of the SARFAESI Act 2002, which provides that if 60% of the creditors in value takes a decision to realize, then the asset would be realized. If they decide to relinquish, then the asset would be relinquished. However, maybe I'll clarify again that there is no clarity as such in the provisions of IBC as to what will happen if there are pari passu creditors. And if they have divergence of view, some are saying to realize, some are saying to relinquish. And next, I move on to another important discussion with respect to inter se priorities. Is, say, for example, there are 3 creditors and the priority is, say, creditor number 1 is the first charge holder, second creditor is the second charge holder, and the third creditor is third charge holder. So once the asset is relinquished and it falls under the common pool of the liquidation estate, whatever money is realized out of that asset, will that be paid in the same priority, or the creditors will lose their and they will become a homogeneous creditors and they will lose their high priority on the secured asset. So the matter is still sub judice. There were 2 rulings of NCLAT, one in the matter of Technology Development Board versus Anil Goel, and second was in the matter of Anil Kumar Anchalia versus Oriental Bank of Commerce. Both of these matters have been tagged together and are pending before Supreme Court. And the question before Supreme Court is simple. It is such that if the creditors decide, if the superior, inferior, senior, junior creditors decide to relinquish the asset in the common pool, will their superiority and inferiority will continue to remain even when the proceeds are distributed, or they will become homogeneous creditor once they decide to relinquish the security interest. So this matter is still pending before Supreme Court. However, there is a very old, I think 2006, there's a ruling of Supreme Court in ICICI versus Sidco Leathers, where the inter se priorities, the superiority and inferiority of the creditors were duly respected, and whatever money was realized was held to be paid in the same priority as the superiority of the creditors is concerned. So this is about the inter se priorities of rights of secured creditors. In the context of IBC, we'll still have to wait till Supreme Court pronounces judgment in TDB matter and Anil Kumar Anchalia matter. Next is with respect to the timeline if the secured creditor decides to realize the secured assets. The secured creditor needs to explicitly say its decision with respect to realization or relinquishment to the liquidator within 30 days from the commencement of liquidation. However, in the event secured creditor does not specify any timeline as such, it will be presumed that they are fine with relinquishment of assets in the common pool. In case they decide to realize it, that is, go under section 52 outside the liquidation process, in that case, the secured creditor also need to specify to the liquidator at what price they are assuming the property will be realized. Now, the liquidator will have a time span of 21 days to actually identify if there is any buyer who is ready to buy the property at a price higher than what is quoted by the secured creditor. In case the liquidator identifies any such buyer, the secured creditor is under the obligation to actually sell the asset to the same buyer whom the liquidator has identified. However, if no such buyer is identified by the liquidator, then the secured creditor has the liberty to sell it to anyone he wishes to sell. So, given that it's a very procedural and time restricted path, and maybe take the decision forward to other concerns in liquidation. So next is with respect to treatment of workmen and employee benefit dues and funds. So this is very, very significant point under liquidation. So there are 2 sections. One is section 36, which talks about what is liquidation estate, what will form part of liquidation estate, what will not form part of liquidation estate. And then there is section 53, which talks about the priority in which the stakeholders will be paid off. Section 36(4), which talks about what will not form part of liquidation. Clause 4 provides that gratuity, provident fund, and pension fund dues will not form part of liquidation estate, which means they have to be paid out of the waterfall. Now the question comes, what if there is no fund as such? No gratuity fund, or say no pension fund has been formulated by the corporate debtor. In those scenarios, is liquidator under the obligation to bring in funds, or like how to deal with such a situation? And the second question is, so law provides for gratuity, pension fund, provident fund. What if there is any voluntary employee benefit fund or workman benefit fund has been formulated by the corporate debtor? Will that also form part outside the liquidation estate, or how to deal with that? So, with respect to the second question, that is in the context of voluntary funds, law is not clear. Law only says about provident fund, pension fund, and gratuity fund. What will happen to the voluntary funds is there is no clarity as such in the letters of law. And the second question is with respect to what will happen if there is a fund but no money has been contributed to that fund. In that regard, there is a ruling in the matter of Sawan Kodiwala. It's a slightly older ruling where Supreme Court held that if there is fund but no money has been contributed to that fund, then liquidator cannot be made obligated to bring in money for the purpose of paying the workmen. However, in the recent past, we have observed that slightly different rulings are passed by NCLTs and NCLATs where they are taking a view that even if there is no funds in the gratuity fund or provident fund or pension fund, then it is on the part of liquidator to bring in the required shortfall or whatever is there. Liquidator is under the obligation to contribute the shortfall in the fund. However, once again, the letters of law is not clear on both of these grounds. I'll maybe now move forward to another significant point, which is with respect to tax dues. So before I start with the tax dues part, I'll brief on what exactly I'm going to discuss in tax dues part. My discussion in tax dues will be twofold. I'll be discussing about two different issues under in relation to taxation. First issue that I'll be discussing on is with respect to priority of tax dues at par with secured traders. So to put it in simple words, can income tax past dues of tax be kept at par with secured traders and be paid at higher priority under waterfall? So this is the first issue that I'll be discussing on. On the second issue on which I'll be discussing would be around the past income tax dues. From past income tax dues, I mean to say the dues that pertains to period before the commencement of liquidation, getting adjusted with the dues refunds which are paid for the period during liquidation. To put it in simple words, say for example, the liquidation proceedings of a corporate debtor begin on say 1st of January 2024. After, or say 2023, for the period during liquidation, there were certain tax refundable for the corporate debtor. However, the same corporate debtor had certain past income tax dues. From past income tax dues, I mean to say dues pertaining to the period before 1st January 2023. Can these past dues be adjusted against the dues which are refundable during against the refund paid during the liquidation period? So starting off with the first question, which I just now pointed out with respect to priorities of tax dues versus secured creditors. So there was a ruling in 2022 in the matter of State Tax Officer versus Rainbow Papers Limited. Before this ruling came in, the stance with respect to tax dues was more or less clear that tax dues will be paid in lower priority at par with the government dues, in the head of government dues. But after the Rainbow Papers judgment came in, this settled position of law actually got disrupted because in State Tax Officer versus Rainbow Papers, it was held by Supreme Court that tax dues will be treated at par with secured creditors and hence will be paid on second priority under waterfall mechanism. And right after the Rainbow Papers ruling, most of the IPs in the country started getting and were kind of bombarded with application from government departments relating to treatment of tax dues at par with secured creditors. However, some months after the Rainbow People's judgment, there came another judgment of Supreme Court in the matter of Paschim Vidyut Nigam Limited versus Raman Ispat, which kind of limited the applicability of Rainbow Papers to the facts of that particular case. So if you look at the left side of my screen, I've highlighted one part in the extracts of the Raman Ispat ruling. It reads as, however, the separate and distinct treatment of amounts payable to secured creditors on one hand and dues payable to government on the other clearly signifies Parliament's intention to treat the latter differently. So here, Supreme Court is meaning to say that government tax dues will be treated at par with government dues and hence will be paid in lower priority, and there is no question of treating the same at higher priority at par with secured creditors. So the situation was kind of in control that another ruling of Supreme Court came on 31st October 2023, which once again, pursuant to which once again the matter was kind of became sub judice. Supreme Court in this review petition, which was pronounced on 31st October 2023, held that the judgment of Raman Ispat cannot be expected to have overruled the judgment of Rainbow Papers. And the reasoning which Supreme Court stated that because the judgment passed by Rainbow Papers and Raman Ispat was by the bench of equal footing. Both the benches were division bench and it was not a superior inferior bench of Supreme Court. Therefore, both the judgments are equivalent. So this review petition neither clarified the issue nor resolved the issue. It kind of left the matter sub judice. And that is why one more curative petition. So curative petition is the last stage when it comes to Supreme Court. So one curative petition in the matter of Rainbow Papers is also pending before Supreme Court, in which the judgment is yet to be pronounced. So as of now, the situation is such that both Rainbow Papers and Paschim Vidyut Nigam, both the rulings are, applicable. And this applicability is because of the judgment of Supreme Court in the review petition of 31st October 2023. Now, you'll also identify that there are several matters which are pending before NCLTs filed by tax departments, treating them at par with secured creditors. However, the matters are standstill on account of pendency of judgment in the curative petition. However, till the time being, another question would come how to deal with government claims which are citing Rainbow Papers ruling. Because the matter is standstill, but liquidator will have to take a decision in that regard. So how to deal with such claims? So for dealing with such claims, we can have a look at Regulation 21 of the liquidation regulations. Regulation 21 talks about the manner in which secured creditor can prove its security interest, and the regulation provides for 3 ways in which security interest can be proved. First is with respect to records available with information utility. Second is with respect to certificate of registration of charge issued by ROC. And third is with respect to proof of registration of charge with CERSI. So there are 3 ways. Now, when it comes to tax dues, can the department says that they have done either of the 3? It's obviously not possible. So if the law gives me a guideline that security interest can be proved only by way of 3 means, and if a creditor is not able to prove his security interest in either of the 3 situations, can we say that department is a secured creditor and hence should be treated at par with secured creditors and be paid in topmost priority and the waterfall? So the answer remains to be, the question still remains to be unanswered. But for the time being, till the judgment is pronounced, liquidators can take a view pursuant to Regulation 21. And another significant point which I'd like to highlight that on almost 2 years back, on 18th January 2023, MCA came up with a discussion paper. That discussion paper was quite significant because it provided for kind of a complete overhaul of the code, IBC, not a particular regulation, but the entire code as a whole. And one of the significant proposals in that discussion paper was with respect to amending section 53 of the code, wherein they kind of tried to make it very clear that government dues, doesn't matter of whatsoever standing it is, will come at lower priority only and will not be treated at par with secured creditor. However, till date, nothing has been, no such amendment has come up pursuant to this discussion paper of 18th January 2023. So this brings me to the end of my first question in relation to tax dues, whether they will be treated at par with secured creditors and how to deal with government claims which are cited in Railway Papers ruling. Moving on to my second question, which was with respect to, can the past dues of the corporate debtor, past tax dues of the corporate debtor be adjusted against the refunds which are granted during the period of liquidation? So there was an NCLAT ruling which came, I think, 6-7 months ago, which clarified the stance, pursuant to which whatever dues remains to be paid before the liquidation commencement date is not to be classified as a due. It becomes a claim to the liquidation estate. So the department is required to file a claim for its past dues, and it has no authority to actually adjust the same against the refund which is to be paid for the period during liquidation. Because if they do so, if they adjust their past dues with the refunds during liquidation period, they're kind of breaching the priority which is provided under Section 53. They are claiming priority even before the liquidation cost. So that should not be the case, and NCLAT has very clearly specified on this particular issue as well. So this brings us to the end of tax-related concerns. Next, coming stakeholders consultation committee, we had a very fruitful decision sometime back in relation to SCC. Is anyone
I have
right?
one question.
Yes, ma'am.
What is the procedure for claiming that that demand is adjusted? Sorry, the refund is adjusted towards the demand. How to reclaim it? Because
So, ma'am,
I
yeah.
filed the grievance. They said no, now it is cannot be done. I have to file it with NCLT.
Right, ma'am. So what happens in case of adjustment of refund? Income tax has this automated process pursuant to which any refund is adjusted against past dues. So in this situation, what you can do, you can maybe file application before NCLT and seek necessary direction in relation to the same. And this is happening mostly because of this automated process on the income tax end.
Okay. And if
Right.
in case of after dissolution of the company, in case because after fighting with the IT department, I got the refund of 20,000, but it was after dissolution of the company. Now, how do I claim it? Because the account is closed. What is the way out, or should I tell them to deposit with IBBI? What is the solution?
Account is closed in that case, that is the only option that remains. But maybe an application can be filed before NCLT for seeking necessary directions. Because if I say that, because generally what happens, the money that goes to IBB is the unclaimed amount, and the amount which there
Yes.
is no stakeholders to take that amount, right?
Hmm.
So that kind of amount goes to IBBA. So in this situation, maybe you can file an application before NCLT and seek necessary directions. If that is to be transferred to the account of liquidator, and from there it is to be transferred to the stakeholders, or
Okay.
right and right.
Thank you.
So next, moving on to the SCC. And with respect to SC, this provision was not there earlier, as all of us we must be aware. This came in 2019, and the major difference between COC and SCC is that the decision of COC is most important. No one can sit on the decision of or the commercial wisdom of COC, but in case of SCC, it's not like that. By the very name, it is a consultation committee. Although the recent amendments are kind of moving in another direction, and from consultation, it is kind of making assist, discretion a compulsion on the part of liquidator. However, going by what was the intent behind SCC was such that to assist the liquidator during the liquidation process. Even if we look at the composition of COC versus SCC, COC is formulated out of the financial creditors who are bankers in general in most of the cases, and who have a good experience when it comes to dealing with NPAs, non-performing assets basically, and with respect to realization and everything. So they have expertise in that field. But when it comes to SCC, it forms part of all the creditors of the corporate debtor. who have divergence of views and interest. Therefore, the question is, can decision making be directly related to incentives of the decision? With a very little chance of getting anything out of the liquidation estate, will it at all make sense, or is it actually meaningful to put so much a reliance of consultation committee? And because of, as I mentioned some time back, because of the recent amendments, even the liquidator is under the obligation to call the meetings of SCC every 30 days. So the question is there any requirement as such? If we look at the practicality of the situation, do we need to call the meetings of SCC every 30 days? Given that they have different interest, divergence of interest, and there is very little chance for lower priorities creditors to get anything out of the liquidation estate. Even not even a penny is paid to those low priority creditors. So does that even make any, reasonable justification for the purpose of so much of reliance on SCC? So this is one of the concerns which I think is there in most of the cases wherever there are SCCs.
Actually, I want to discuss some other thing where the SCC consists of only operational creditors, and they are not supposed to get anything from the and there is no assets. Okay, so they will not contribute to the cost, and we are also hardly liquidator is going to doubtful about recovering his fees also. So in that case,
Right.
how to rely on these? Means how to go ahead with this liquidation also when there is a
In
only
right. So that's
Hmm.
actually a very, very practical situation which happens in most of the liquidation matters as well. And not just such scenarios, sir. Say, for example, a liquidation is reaching its fag end and it's about to get over, and there's very little fund available in the liquidation estate. In those scenarios, calling the meeting every 30 days is also a practical challenge. And in that case, maybe an application be filed before NCLT seeking any kind of ease from compliance with so much of reliance
They
on
will say that
SCC.
directly dissolve the company. Actually, this type of things they will advise that file the dissolution application only. But thinking that
Right.
we are not able to receive our fees also in that case, what to do?
It's actually a very, meaningful and practical issue in most of the liquidations.
Okay.
Yeah, now next I'm moving to the avoidance proceedings which comprise of preferential transactions, undervalued transactions, fraudulent transaction, extortionate credit transaction. So if I look at the look back period for the purpose of identifying such transaction in cases where related parties are involved, for the purpose of preferential and undervalued transaction, there is a look back period of 2 years. And in case of unrelated party, the look back period of 1 year. In most of the cases which goes under IBC, we would observe that there are several matters wherein the cooperative was actually inoperational several years before the application was filed before NCLT. So in such scenarios, say maybe I'll take example with the help of dates. Say the application was admitted on 1st of January 2023. My look back period ends on 1st January 2021. But say the cooperative was not at all operational in the last 2 years. Do I keep myself restricted only to those 2 years, or should I move back from those 2 years to see at if at all there were such situations which gets classified under avoidance proceedings? The law is also unclear on such situation. But when it comes to fraudulent transaction, there is no look back period as such, because by the very nature, fraud cannot be kept restricted to a number of years as such. And at whatever instance a fraud was found to have or were expected to have, then that has to be considered. Next, with respect to adjudicating authority and legal proceeding, this once again, I believe most of the liquidators will have challenge in relation to this particular aspect. So if we look at the graph presented on the left side of the screen, it shows the ground reality as on date. So the statutory timeline for completing the liquidation process is 1 year. However, this long maroon color circle would show that more than 57% has crossed the timeline of 2 years. So when IBC was enacted and the regulations were notified, the timeline for completing the liquidation proceedings were 2 years. And subsequently, the timeline was reduced from 2 years to 1 year. But just reduction of timeline is actually not helping in completing the process within time. And in most of the cases, the statutory timeline is getting surpassed. And this is getting surpassed, and the prime reason behind it is the long drawn time which it takes for completion of litigations before the benches. Although recently NCLT has inducted several new members to ease out the pressure on the other benches, however, there are still certain areas which are not so adjudicative matters and therefore can be passed on to the liquidator's discretion. Now, some of the matters which could be passed on to the liquidator is like voluntary liquidation. Now, in case of liquidation versus voluntary liquidation, the prime or the surface differences in case of voluntary liquidation, there is enough money for payment to all the creditors. Like, so the corporate debtor is solvent enough to service all its dues. But in case of liquidation, there is a deficiency, there is a lack of funds. So if there is already sufficient funds with the corporate debtor in case of voluntary liquidation, the role of NCLT can may be considered to be removed from that particular aspect, and all the voluntary liquidation matters can be taken care of by the liquidators themselves. Another stuffs like extension of timeline, modification of claims, etc. So this type of matters can be taken off the NCLT benches and can be moved on to say IBBI or IPAs. So if such kind of matters which does not requires much of the involvement on the part of NCLT judges, that can be passed on to IBBI or IPAs so that benches get more time for the purpose of addressing the issues that really requires their time. So declogging of NCLTs is one of the options for the purpose of ensuring completion of liquidation proceedings within the prescribed timeline. Next is with respect to moratorium and consolidation of litigation. So maybe right now I'll discuss from consolidation of litigation perspective. So in the CIRP stage, if I put it in a little symbolic way, in case of CIRP stage, the corporate debtor is sick and there is a chance of going to the correct doctor and getting it treated well. But when it comes to liquidation, the corporate debtor is on its deathbed. And say if the corporate debtor has pain in its tooth, or if it is not having a good vision, in that case we should not move from eye doctor to tooth doctor, right, to a dentist. In that case everything can be done by a single doctor because the corporate is already on its deathbed. There is no point of moving from one doctor to another. And that is why when it comes to CIRP, there was a ruling in the matter of Gujarat Urja several years back when when IBC was enacted, wherein in case of the ruling was in the context of CIRP, where the matter could be taken to the relevant authority. Say, for example, this CIRP is case of a listed company, then matter can also, certain aspects of the matter can also be taken care by SEBI SAT. But when it comes to liquidation, given that the corporate debtor, is on its deathbed, there is no point of moving from one doctor to another, and therefore all the matters can be consolidated before NCLT. And I believe most of the IPs would have experienced this thing that several matters are pending before consumer forums, industrial tribunals. And in several matters, we have also observed that so the liquidation is going on, the matters are pending before NCLT, and few of the workmen they have moved to industrial tribunal. They have taken a decree from there and they are running behind the liquidator to pay off their dues. And if the liquidator pays off their dues, they are kind of pays off their dues in entirety. So there is no point of proportionate payment or something like that. So if liquidator pays off to those workmen basis the industrial tribunal judgment, they will kind of be non-compliant with Section 53, which deals with waterfall mechanism. So this becomes a very tricky situation for the liquidators as well, and therefore law should be made clear on this point as well, that when it comes to liquidation, NCLT be the sole and the only forum for filing the application. Whether workman needs to file, whether anyone wants to file application against a corporate debtor, then NCLT should be the only adjudicating authority. Pendency of application before several other authorities just delays the process. So this is about consolidation of litigation. Next, coming to scheme of arrangement. So when I'm talking about scheme of arrangement, I'd also like to highlight about going concern sale. So initially, when IBC was enacted and the regulations were notified, going concern sale was not a part of liquidation. So the several ways which are provided for the purpose of realizing the assets of corporate debtor, going concern sale was not one of them. And it was subsequently included in the liquidation regulations. And now, as per the last discussion paper which was floated in February, just last month, it is proposed to take off the provision related to going concern sale in entirety from the liquidation regulations. And the reasoning behind this proposal is that when the company is in CIRP, there's an option for the resolution applicants to take the company, to acquire the company in going concern sale. When the company slips into liquidation, obviously its value goes down and the applicants get the same entity at a cheaper rate. And that is why there were several resolution applicants who were not submitting the plan for going concern sale during CIRP. I mean, they were not intending to acquire the CD during CIRP, but were submitting plans for going concern sale during liquidation at a slightly cheaper price, at a significantly cheaper price. So this actually led to lower realization on the part of corporate debtor. The second reasoning which was given in the discussion paper is such that if the corporate debtor is sold by way of going concern sale, the realization was comparatively smaller as compared to realization by way of other means like slump sale or piecemeal sale. So if the liquidator would have gone for piecemeal sale or slump sale, the realization was 2-3% more as compared to realization by way of going concern sale, and that is why it is proposed to completely take off the provision with respect to JCS in case of liquidation. Now, with respect to scheme of arrangement, although there is a provision with respect to scheme of arrangement during liquidation, but it is very less opted. As per the IBBI, as per the data released by IBBI as on 31st December 2024, just 14 liquidation processes were such that which were closed by compromise or arrangement. So even though the provision is there, the same is least opted or least preferred. And the sole reason I would say behind the same is the strict timelines. Now, if I compare with the regular scheme matters which happens under section 230, read by 232 of the Companies Act, which are filed before NCLT basically, it takes on an average of 6 months to 8 months for the purpose of completion. And this is the average period for completion of merger matters or scheme matters rather. But liquidation regulations provide for completing the scheme of arrangement within 90 days. So there's almost half of the timeline is provided in case of scheme of arrangement during liquidation. This is the first challenge that comes up when it comes to scheme of arrangement. The second issue is that the provisions are not clear as to what will happen and what is to be done when it comes to scheme of arrangement during liquidation. So I'll just slightly move from here and I'll brief on what happens in case of regular scheme matters. Application is filed before NCLT seeking direction for convening the meetings of shareholders and creditors for the purpose of taking their assent. But in case of liquidation, will it make sense if we file application before NCLT seeking direction for convening the meeting of shareholders? But it would be completely baseless. Because first of all, shareholders are getting 100% haircuts. So there's no point of going to the shareholders for taking their approval. So what exactly will be the process if the liquidator opts to go for scheme of arrangement in case of that particular corporate debtor is also very unclear. And that is the reason why very less or say just a drop in the mighty ocean has gone for scheme of arrangement. Next, moving on to the last part of the session is with respect to practical concerns in other areas. So some of the questions are with respect to liquidator fee as well. So right now, the provision says that the SCC in its meeting will decide on the fee that will be paid to the liquidator. So till the time SCC is formed and with respect to the timeline for composition of SCC, the first meeting is to be convened within 7 days, wherein the COC is treated as SCC, and eventually after claim collation and everything, liquidator formulates a proper SCC as per the provision of regulation 31A within 60 days of liquidation commencement date. So will it be, I mean, meaningful on the part of liquidator to take up an assignment where even his fees is not certain? So giving this power to SEC to decide on the fees of the liquidator is, I think, not justified. Other professionals who have joined in the meeting can also pitch in and share their views on this part. If anyone would like to speak on this front, or else I'll maybe move forward.
But whether the liquidator has any option to avoid it when it is assigned.
That I agree, sir. That I agree with you, sir. But then still there's a lacuna in the cited provision of law, because it is not justified on the part of liquidator who take up so much of burden of carrying a almost a dead body from to take it to its ultimate end, that is the dissolution.
So like case
Also,
where there are only unsecured creditors are there and there is no asset and though nobody will pay for you and you have to carry the show till end, what will be the recourse then? No asset, only no financial creditor, only operational creditors, and some puffet transaction that will realize when we don't know.
and it actually becomes
Then
a right very, very
when there are no
challenging.
assets, nothing is realizable. I think it is better to go for dissolution.
Right, sir.
Yeah, but
Yes.
only if you only waiting for puffet transaction to be decided by the NCLT, that will take again more than 1 year and we have to submit all the documentation.
Well, submitting the dissolution application, so the liquidator can maybe clarify on how the avoidance transaction will be taken care of, because liquidator cannot be assumed to be bound with the cooperator till all the matters are dissolved. Specifically, the avoidance matters are dissolved. So, while filing the dissolution application, maybe the liquidator can cite on with respect to the treatment of the avoidance transaction, and accordingly,
Because
discretion may be
once
given.
it is dissolved, puffet transaction cannot continue because company is not there. So how can that, unless there is an assignment of, we cannot say that company will go on, we will submit a dissolution application.
Right, so maybe another thing that can be done is the non-realizable assets, the NRRA, they can be clubbed together, not readily realizable assets that can be clubbed together, and maybe steps can be taken for the purpose of realization of NRRA. So we have seen a few matters in Mumbai bench as well, where NRRA was clubbed together, not readily realizable assets, which actually form parts of the avoidance matters, and they are sold off by the liquidator. So something like this maybe
So that is
can be done.
sold out and see the assignment. If that is not there, then what to do? So, so that is the last option, that going for assignment of this puffet transaction means we have to see the auction of this and if somebody is coming forward. But till that we have to run the show without any fee.
That is actually a very, I mean, challenging part in with respect to liquidation matters. And
When it comes from directly NCLT, we cannot say no. We have to carry the show.
that is actually a challenging part so, of the job of the liquidators.
But there has to be a representation now on such situation to the IBBI or the NCLT or some lawmakers.
Right, sir. And not just on this front, there are several other matters which actually requires, representation, clarification from the higher authorities. Next, even if we talk about the listed companies, how the listed company will be treated and how will the compliance with listing regulations will be taken care of when the company is in CRP or liquidation, that is also quite unclear. From the the company has slipped into liquidation, its trading has stopped, but how to carry out with the compliance of listing regulations, is liquidator bound to take care of? If yes, then because there is also inadequacy of supply of documents to the liquidator. In several of the matters, the liquidator fails to even get access to all the information, kind of also suffers resistance from the other party. So this kind of practical challenges are actually required to be addressed by the higher authorities.
And they say that liquidator is bound to comply with listing agreement. All statutory compliances has to be made by the liquidator, including the listing agreement, SEBI guidelines, all these things. Even he has to call
Right.
the meeting of stakeholder. Means if the listed company is there, then the meeting has to be called. And but how to do that?
So that actually becomes a practical challenge because you're expecting liquidator to do so many things where the law is also not clear on so many things. So there is actually some vacuum still in the provision, and IBC is actually still, even after almost 9 years of it coming into light, it is still in its developing stage, I would say.
There has to be some mechanism to redress these grievances to the authority.
In fact, Neha, it is not just limited to this fact that the liquidator is required to comply with the respective provisions. Now it is also on this front that if there is any kind of non-compliance, then liquidator is liable to pay for that non-compliance as well for the penalty or
Right.
fine as may be imposed by the respective regulatory authorities. That is also
And
forming
that's
part of the IP regulations. Yes,
and that is also out of his own pocket. So
absolutely.
right. So that is once again a very challenging part in the code. So that is it from my end. If there are questions, if anyone have any question, that maybe we can address at this stage.
So regarding that income tax dues and all these things, if it is not applicable, that rainbow case is not like that, there is no security access. So we have to deal with as if previously the law is there as a 53 mechanism, or there is a change there.
Sir, so maybe for dealing with such situation, when the matter is so given that the matter is still sub judice and the judgment has not come in the curative petition as on date, so ultimately NCLTs will have to take decision in this regard. But till the time the application is filed by the tax department before NCLTs, liquidator can maybe take resort to regulation 21A and seek justification from the tax department to justify as to why they are getting qualified as a secured creditor. And if they are the secured creditors, they need to prove their secured interest by way of either of the which is the SARSA registration, document submitted with IU or the charge filings.
So thing is that means we have to still whether you have to be treated as secured or unsecured. That is the first thing.
भेजते नहीं क्वेश्चन ऐसे करते हैं तो उन्होंने पूछा अटैचमेंट क्या कहते हैं वो लगा नहीं अभी मेल ही आया इंस्टीट्यूट की तरफ से
I have a question here.
ओके रिफंड के लिए अटैचमेंट बता दो बैंक अकाउंट और
It's if the one of the financial creditors who's a secured financial creditor, they don't take a call on releasing the asset for liquidation, and they file their claim without clarifying about releasing the asset. How and in what capacity should the liquidator continue?
So, sir, the law provides that the secured creditor is under the obligation to state its decision within 30 days of liquidation commencement date. And if no explicit justification or, answer is coming from the secured creditor's end, it will be assumed that the secured asset will form part of the liquidation estate. That is, relinquishment will be assumed.
Will be assumed.
So
Yes, sir. The
earlier
law is
there
very
was
clear.
confusion regarding this, sir, that what if the respective secured creditor has not relinquished the rights on the security interest? But now, just to avoid this delay which was given to the secured creditors, or this unnecessary levy which was given to the secured creditors, now the law is clear. 30 days window is there. If you decide whether to realize or relinquish, either if you are deciding to realize, then again there is a separate window that you have to realize within this time frame, and after realization you have to contribute to the liquidation estate the remaining part thereof and towards the liquidation cost as well. But if you decide to relinquish, then relinquish it immediately and then communicate the same to the liquidator so that liquidator can take the necessary action. If you are not communicating anything within the window of 30 days, then it will be a deemed relinquishment and liquidator cannot wait further. Liquidator will proceed further with the respective realization of the assets.
Perfect. And you said that if the secured creditor decides to realize it themselves, then again there is a window. What is that window time?
So that window time is of 60 days.
60 days.
So
60 days.
X is the
60
liquidation
from-
commencement date.
From
X is the liquidation
commencement.
commencement date. From liquidation
Okay.
commencement date is 30 days within which they have to inform. And
Yes.
from that date, from this 30 days window, they have
Yes.
60 days window to realize the assets.
So that means 90 in all from the date of
So from
start
the
of-
liquidation commencement date, it's 90 days on and all to realize the assets.
Fair
Which is
enough.
of course is a shorter window, but the law provides so they have to abide by the law.
All right.
And small question is whether they have to submit the CSG4 sometimes for the means in case of that CSG4 for relinquishing their asset for removing a charge from the registrar.
So ideally they should, sir, because if they suppose they have not filed this particular form and liquidator proceed ahead with the realization of the assets, in that case what happens is liquidation, while liquidator ends up with the realization of the assets, but towards the end when the acquirer will face difficulty with respect to this filing of the form and this getting the assets clear from all these charge aspects and all. So it's better to have that form filed by the respective creditors at the prelim stage as well, so that the acquirer do not face any kind of difficulty at the later stage.
Because nobody think about this line of compliances in normal case.
Right.
So what happens is you also have to bear in mind that when you are realizing the assets, the acquirer will not just acquire the asset. The
Okay.
acquirer will want the rights of the assets as well. The acquirer will see whether at all you have the respective documents with respect to the asset that you are selling or not.
Okay.
Like in case we generally sell a flat, we sell a land. So the acquirer sees that whether at all you have the authority to sell that flat, that land or not. Likewise, in case of IBC as well, if the acquirer is acquiring anything, the acquirer will see if at all you have the proper documentation in hand or not. Because if suppose tomorrow the acquirer intends to sell it further, then the acquirer will not be able to sell it because the proper documentation is not there in hand. So the documentation the part has to be very clear, and that keeping that in mind only, that the IM has to be prepared and the necessary expression of interest should be floated for inviting the claim with the respective acquirers.
Now, we have a documentation, but there is a charge is created against bank and all this PF department also sometimes, or this MIDC also create. So we can ask first and foremost bank for releasing this charge from the MCA portal, no? So,
absolutely, you should ask.
As a
And you should ask
liquidator-
for the. You should also ask for the no objection certificate from their part that they have no objection. So this letter should be this become a crucial letter, crucial document for you at a later stage. So you should ask for this NOC letter from them as well, because the acquirer will ultimately ask you to have that NOC letter.
Remove,
Whether
yeah,
you have
they will
NOC.
ask us to remove that
Yes,
because they are not
absolutely.
taking company assets, but they are taking only asset, but we have to remove it anyhow.
Absolutely, sir. Absolutely.
Yeah, thank you.
Is there any other question as well?
Hello.
Yes, sir.
I've got another question.
Yes, sir.
This is again about the same liquidation. The questions we were discussing was in the claim form, like I have received a claim form from a secured creditor, right? And this decision about relinquishing the property or not is on question number, I think, 8A. Am I audible?
Yes, sir. Yes, sir. You are very much audible, sir.
So this form which I have received does not have this 8A. Either they have removed or they are using some old form. So today there is no clarity.
And D actually provides for that. Maybe I'll just
Exactly.
have a look at the same.
Yeah, form D only provides, and it's supposed to have question 8A, the column 8A.
Yes, sir. So what is the question? What is the concern
The
here?
question is that I have received a claim in which 8A is not there in the form. This 8A has been eliminated or it is not there. Could be some old form. I don't know.
So you are
Right,
saying
actually-
that the respective creditor has made amendment in the form or made changes, edits in the form?
Probably, yes. Because
If
they are
that
not
be the
very
case, you may certainly ask them to go by the
Clarify.
format which is there and
Okay.
refile the claim with you. So you may provide that window to them that resubmit the form. You have not used the proper format. Fill the details in the correct form and then send it back. If they are not going by that, then you may take that same on mail from them as well, that we understand that you have relinquished the security interest and accordingly you have filed the claim under so that if they have any clarity or they want to submit anything, they can submit the same over mail. If they are not submitting anything, then that will be taken as a consent from their end.
All
We
right.
need to guide them.
Fair enough. But I am sure as a banker, they should be aware what they're signing, but still
Certainly,
I
they
will
should be aware. So, in fact, changing in the form, I don't think so that should have been done by the bank, because this is the day in, day out, they are filing the forms. Maybe there may be
Absolutely
certain
right.
mistake from their end, and you may ask them to make necessary changes. So, may guide them with respect to filling the
Fair
form.
enough. Okay, there's another query related to this only. The bank has at the time of what you call filing for liquidation, in the last COC when this liquidation was approved, when the CRP was going on, they recommended that it should be tried to be sold as a going concern. Whereas in the first stakeholder committee meeting, they claimed that they don't want to try even this the going concern option.
That I think
Okay.
primarily should not be, I mean, because in the first meeting of SEC, just the COC members are there. So
True.
they
They
cannot
are the
be
only
expected
one.
to deviate from what they had earlier thought of.
But
Even if they have deviated, sir, so the option that you have is that if you are deviating or if you think that the going concern will fetch more value, in that case, you can certainly deviate from the views of SEC and with reasonable recording of the reason to deviate from the views that has been given by SEC. That this is the reason that I understand that the relation selling the SS as a going concern will fetch more value, and that is why I'm deviating from what is the view given by the SEC. And that right is provided in the law itself. That in case of SEC, the role is still advisory to some extent. And if you are deviating from the advice, then you have to record the reason thereof. So better to record the reason and can move ahead with the best that you think will be what was the best interest of all the stakeholders.
Fine. Another related question. After 90 days, that's a time which is given for the going concern. Fine. Selling as a going concern. Suppose after 95 or 100 days, I get an offer for a going concern. Can it be taken?
Yes, sir, certainly, because the idea is to have
Maximize.
value and maximize the value. So if at all you think that even after the window of 90 days, till the time any amendment is being introduced in the law, certainly, because now law is tending towards this removing this going concern sale altogether from this this IBC. So till the time there is amendment in the law and you have that window to realize or have a more value by selling the corporate debtor by way of going concern, selling it as a going concern. In that case, certainly you can go for that part. Of course, with the intimation or with the necessary consent of the NCLT, that this
Reporting.
window is not there. Now you have crossed the window, but again the possibility to have a higher value is there. I don't think so that any NCLT will reject this part, that not to have the higher value, or any stakeholder consultation committee will say that no, go for the lower value.
Obviously, nobody will say that. In that case, the liquidator gets a liquidation fee or he gets a RP fee, which is getting otherwise for 3 months.
So if the fee was not decided at the prelim stage,
the fee has been decided by NCLT.
How can NCLT decide the fees of liquidity?
NCLT is decided because NCLT is appointed from the panel.
Okay.
And they have said that as per the IBBI 3, 4 or whatever its section is, right? As per the regulation chart as such, table is
They
there,
mention
right?
only the section as per this section the fees will be payable. They are not decide the proper amount, na? They will just mention
amount.
section.
They may they may give an advance amount.
If the reference to the provision is given, then certainly you will go by the provision only, sir. If they have fixed the amount, which I have not seen in any case till now,
they have not fixed anything. They have simply referred to the
so in
provision.
that case, you can certainly go by the provision. So it will be based on the realization and distribution and the window.
No, but if it is done within the first 3 months, then obviously the RP fees come. Am I right?
Even at a later stage as well, sir, if you see some of the going concern cases, you will see that the going concern has happened after 1 or 2 years from the liquidation commencement date and not immediately within the window of 90 days. It's not possible to realize within the period of 90 days, seeing the practical difficulties that has been faced by the liquidator. So it's certainly not possible to realize one asset within a window of 90 days itself. So if you see practically, then there are several cases wherein liquidator has realized the corporate debtor by way of going concern sale after a year or so, and then accordingly the liquidator's fee has been charged based on the realization, based on the distribution, and of course based on the timeline which is provided in regulation.
Perfectly fine. Perfectly fine. I think that solves all the query. Thank you very much.
One question, madam.
So actually thing is that suppose we are deviating from the decision of COC, SEC, then we have to mention in the progress report only now how to inform the NCLT.
Absolutely, sir. You have to mention in the progress report, and now progress report are also required to be to form a part of IA. Yes,
will do.
that will form a IA. That will form a
Ah.
part of IA
Yeah,
application.
okay.
So in application, NCLT will see as to what you are submitting, what is mentioned in the progress report, whether
Okay.
it's just a blank report and what progress you have made during the quarter. So that progress you have to mention. And if at all there is anything which requires NCLT attention, then also that window is also there that you can
So
mention.
So there you
One
have to
point
mention the deviation from our decision, no? So this
Yes,
is
so
the
deviation part has to be mentioned in the progress report. So.
like to add one point. So, pursuant to the 2022 amendments, there is one additional requirement. So, if the liquidator is deviating from the decision of SEC, it also needs to report to adjudicating authority and board within 5 days of the said decision.
So
So
how
there
to
are
Within
intimate,
5
how to
days.
intimate then about progress report is not filing within that period then?
There are two requirements. First is to report to adjudicating authority and board within 5 days, and the second one is to include in the next progress report. Initially, the requirement was only to report in the progress report, but pursuant to the 2022 amendment, this 5 days requirement has also been added in the
So
regulation.
if the requirement is regarding intimating only, so intimation can be given by way of mail also.
So for
It is
NCLT
not
also we
particularly
can
to
give
file
through
any
mail.
application.
NCLT also we can give through mail.
Yes, the registry is there, so you can intimate the NCLT that there is a deviation, and of course that will certainly form part of the respective next application that you will file with the NCLT to inform the NCLT regarding that.
That is okay, but 5 days in mail. So how to? That was the question: is how to intimate within 5 days to the NCLT?
Because the idea again is that we should not burden the NCLT with unnecessary applications. If you keep on filing the applications, then there will become a mountain of application before NCLT, and it will really become difficult for the NCLT to address the cases or address the matters.
Okay.
So the idea, again, keeping that factor in mind, also we can just say that this intimation immediately, if that is falling within a particular quarter and we are about to file the progress report, we can include that as a part of progress report. If at all there is any simultaneous proceeding which is going on, in that case, we can submit that as a part of the CP before the NCLT, informing the NCLT that this deviation has happened. Or otherwise, we can submit the same to the registrar if registrar is agreed to accept the same. Because as I said at the beginning itself, that IBC is evolving law. And based on the practical difficulties, amendments are being introduced. Certainly, because of this minor requirement to intimate the insolvency, to intimate the adjudicating authority regarding the deviation in the view, when application has to be filed, I don't think so that should be a good time of NCLT to explore. So it's better to
we are
inform.
mentioning in the progress report, but not giving any mail to them. That is the problem.
Ideally, the timeline has to be followed. We cannot deviate from the timeline which is mentioned in the law. If the timeline is there, of course, we have to follow that timeline. So if going by the timeline, if five days window is there, so within 5 days, either by way of registrar or so, we should intimate the NCLT. And in the immediate respective application or the progress report, whatsoever you will file with the NCLT, you should bring that to the notice of NCLT that this has happened. And as per the law, this was required. So accordingly, I have informed this via registry.
Okay. Okay.
Madam, one question.
Yes,
If
sir.
financial creditor do not contribute to our liquidation cost, what is the remedy?
Sir, financial creditor may not contribute towards the liquidation cost because they have already involved a huge cost and that cost is not being paid to them. So if at all that being the situation, then we have to have a outsider to contribute towards the liquidation state. If at all any third person is agreeing to contribute towards the as an interim finance to the liquidation state. If at all that person is agreeing, so what will be the priority that person will be getting? The person will be getting interest. The person will be getting priority when it comes to distribution. The person will also be getting a participation in the meeting, but that is not introduced yet. So they may get the participation in the meeting as well. So that part may be there. But as of now, the having a sinking ship, further finance from any outsider, it sounds difficult. So if at all the situation is such that the company is in liquidation, there's no fund at all, then it will be better to file the application for dissolution of the company rather than dragging the process unnecessarily. Because if there is nothing to realize, I don't have costs, certainly I cannot pay to from out of my own pocket towards realization. So either the respective creditors have to make contribution so that the process can be followed. If none are ready to make the contribution, if none are ready to cooperate with the liquidator, in that case, liquidator will have no other option than going for the dissolution of the corporate debt and without following the detailed process.
Thank you, ma'am.
Is there any other questions? Okay, so thank you so much everybody for this participation, for this active participation. And we look forward for more session, for more interactive session in future as well. Anjali ma'am, over to you.
Thank you very much, Barsha ma'am and
uh,
Neha ma'am, for taking out your time and addressing session on the topic practical difficulties in liquidation proceedings and recent judicial developments. Thank you very much, ma'am. Ma'am, you are requested to please share your material if you are having it.
We'll do that.
Thank you, ma'am. Thank you.
Thank you.
some slides are very good, madam. Can you share it to us,
We will do that.
please? Thank you.
Ma'am, please share the PPT so that I can share with the participants.
I'll share it to you, ma'am.